Welcome back to our weekly update on gold. I'm your host, Kerry Stevenson. Joining me today, I have got Bernadette Sukkar. She is with St. Gabriel, which is a corporate advisory firm. Also joining me today, Barry Dawes, Executive Chairman of Martin Place Securities. Welcome, both of you. Thanks so much for joining me this week.
Thank you for having me, Kerry.
Thanks for the invitation.
Well, it's been what a week in gold. Gold has been, even in the mainstream news this week, you all know that I run the Australian Gold Conference. This is its new official podcast as we lead up into the Australian Gold Conference. But by the way, ladies and gentlemen, 26th to 28th of August at Crown Towers in Sydney. So one of the things I wanted to talk about today was that big rise in the gold price and the fact that finally, it's really weird, people like ABC News are getting figures on and talking about gold. It's reached an all-time high. It's had what I think is a healthy pullback, but Goldman Sachs is saying it's going to get to 2,700 in a very short period of time, and Citibank says 3,000. That's US dollars, ladies and gentlemen. I don't even contemplate what that might be in the Aussie dollar, but also HSBC is now allowing retail investors in Hong Kong to buy real gold through digital tokens. And that's the bank's online banking service and app. Very interesting. It's the first time that HSBC has used its private distributed ledger for everyday investors. You know, that's powering a gold token. It's using its digital assets platform Orion, which allows them to issue these digital assets, kind of like bonds, I guess. So it's very interesting times. And we also see people buying a lot more gold, such as central banks. Interesting time for gold. Both of you especially, Barry, you've been very bullish on gold for a long time. And Bernadette, recently, you've been over in Saudi Arabia. We've all known Saudi Arabia as very much involved with oil, but now they're looking more at resources such as gold. So let's start with you, Bernie. Let's start with why you've got that connection with Saudi Arabia, and what are they looking at? Are they why is there a move away from the oil sector?
I wouldn't say there's a move away from the oil sector, but the kingdom's set up they've established their 2030 vision. Part of that is to diversify and grow industry. Minerals is a big part of that plan, and they see it becoming the third pillar of the Saudi economy after oil and gas, petrochemicals, then minerals. So that's the vision. Obviously, oil and gas has a different future to what it did in the past, and the kingdom's making sure that they're covered.
Do they have a preference for any commodity? Because a lot of people are always talking about these sort of the critical minerals and the new age of minerals and the sort of the green economy, or are they also looking at precious metals?
Across the board. So there's the Arabian Shield that lies across Saudi Arabia, and it's highly mineralized. There's a lot of prospectivity. It's been valued at, the exploration potential has been valued at $2.5 trillion. And that's across various minerals, including your precious metals, your base metals, the critical minerals. There's a lot of phosphate, bauxite. So iron ore is another commodity. And the kingdom's basically committed to developing the mineral sector. They've invested a lot of time, a lot of money. They've overhauled their mining code to fit best practice. They have jammed the doors wide open for foreign investors, expertise, service providers to come in and embrace what could potentially be trillions of dollars in mineral resources.
Are they making it easy? I don't want to go into it too deeply on this call, but maybe we'll do this on another one. But just briefly, are they making it easy for those people that want to come in let's just say an Australian
Absolutely.
supplier, they make it easy, you know, are there royalties? Is there going to be, or are they saying we're going to be, it's going to be compelling for people to come into the kingdom?
Yeah, absolutely. It's not just about minerals, it's about industry. They have 10 mega projects valued at $1 trillion that the kingdom is developing from now to 2030. And as part of that initiative, they obviously are looking to be able to supply their own commodities, materials. So developing midstream and downstream, upstream, the whole lot, becoming self-sufficient. In terms of compelling, very compelling. So going into Saudi, you are permitted to own 100% of the entity. So 100% foreign-owned entities are permitted and not at all frowned upon. So that's one major initiative in terms of royalties. There are various incentives in place. So the royalties, depending on the commodity, range between 1.5 and 3.5%, around that. But corporate tax is 20%. The sovereign fund will fund up to 75% of capex for projects at a very reasonable rate of 3%. So from an exploration perspective, they've just recently launched the Exploration Enablement Program, which is valued that there's $180 million committed to that, and it's been set up for exploration companies to support them financially from an exploration perspective. So it will cover work programs, drilling, geophysics. It will cover labor, local labor, and each company can apply for up to 15 applications, each license up to $2 million US in incentives.
Okay, so it's clear to me that they're opening up. It's just I think it's an interesting take on how they're shifting in this new economy. Barry, it's thanks for that overview, and I'm going to come back to you, Bernie. I just want to go to Barry, and Barry, you've been very bullish on gold for some time now. Just shifting scenes a little bit from Saudi, which I think is really interesting. Have you been to Saudi, Barry? You bullish on Saudi and what they're doing?
No, I haven't. I haven't been there, but certainly it makes a lot of sense for them to use the capital that they've gained from oil and gas business to diversify the economy. What's really important in the Middle East there is the availability of gas, which means that electricity is cheap. So we find that aluminium, alumina is very attractive in those countries. Also, we're seeing a lot of steel production in the Middle East using DRI technologies that rely on the gas as a reductant or as cheap electricity in terms of smelting electric arc furnaces, treating the various pig iron or DRI products to make steel. And we've also got, one of the company, European Lithium, is looking to establish a lithium refinery in Saudi Arabia, again using low-cost power.
Well, I'm going to bring this back a little bit if I could, because we are talking gold predominantly, and I know Saudi's doing lots of things. But Barry, I said right at the start here that gold's had a big run, but a bit of a pullback this week, and so a few people getting a bit of jitters and saying, "Oh, should I sell all my gold now?" And I'm like, no, don't do that. I think it's got a long way to go. Be very curious. Obviously, Barry, you'll be at the Australian Gold Conference, but what's your views at the moment?
Well, it really is only just starting. That's the most important thing. We've got many reasons for people wanting to hold gold. central banks really want to ensure that they've got something solid behind them. And I think we're going to hear a lot more about central banks and gold in the next year or so. I think it's very, very important. That's because we will be going back to a sort of gold standard. I don't know.
Say that again. We're going to go back to a gold standard.
I believe we will. Now, what form that takes, I'm not sure, but I get the impression it will be a commercially driven move rather than something that governments, because political governments at the moment, they just want to spend, and that's the real problem we have. Fiat currencies and budget deficits, people just making up money, printing money. So that's not going to be the way it's going to happen. It's going to really come through the marketplace. But the most important thing is that we've got the gold price rising in all currencies, and we've got the gold price going parabolic, really parabolic in certain currencies. And all this is a part of a currency crisis and realignment that we're going to see over the next few years. Fundamental to that is the fact that the European currencies, and here we talk about the euro, talk about pound sterling, and talk about the Swiss franc, these currencies have broken a 50-year uptrend against the US dollar. So they are falling now against a strong US dollar, and we've got a strong gold price. I'm of the view that we'll see a very strong US dollar and a very strong gold price. So people who think about that the story is all about the US dollar going down, I think they're going up the wrong track. Now, in my view, the yen is about to collapse.
Why?
Debt. Just got far too much debt. Its interest rates are far too low. If you watch what's happening in these bond markets, it's pretty horrific. But now the A dollar and the yen are pegged at basically 100 yen to an A dollar. When we go to 104 yen to an A dollar, we will see the A dollar really shoot up, which basically means the yen will fall quite sharply. Now, when we go and look at the European currencies, the euro, which people think is the alternative to the US dollar, well, it ain't. I feel very strongly that we probably won't have a euro in another couple of years. I think internally we'll see people wanting to leave the European Union. Now, the euro at the moment is about 107. It's been around 106 just recently, but if it breaks 103, it's going to be in free fall. The significance of breaking a 50-year uptrend against the US dollar, I think, is really important. So we've got this currency instability, some big changes in the world that I believe will be, or I consider will be for the better. I'm very bullish on the US stock market. Many of the gold bugs are bears on the US dollar and bears on the US bond market and bears on the stock market. But that's not what the markets are telling me. It's always heed the markets, not the commentators. What are the markets actually telling you? So we had this 4-year period of consolidation with the gold price under that 2090 level. We finally broke through it and we raced up to over 2,400. Now, if you want to do your Elliott wave counts, we've finished one of something, and we've seen just a typical traditional ABC correction. I think we should hold around here, and then I think within another couple of weeks we'll start the next leg up. Now, one of the things I keep pointing about.
So let me just interrupt you for a second there, Barry. Does that mean that this is just a small pullback, and it's a good time if you're into buying physical gold? This would be a good time to top up or to get in.
It most definitely is, in my view, and we have to look at the gold price in all sorts of different currencies, as I've mentioned before. The gold price is rising parabolically. It's due for a bit of a pullback, which we've probably seen. But I think the instability in the major currencies against the US dollar is going to be a really important driving point there. Now, people talk about the currencies, so countries moving away from the US dollar. It's only at the margin. Most of the issues, as far as the BRICS are concerned, are really talking about a trade account. But most of the capital in the world is expressed in US dollars. Whether we're talking about equities, but more importantly, the bond markets. Almost all the bonds in the world are, the vast majority of them expressed in US dollars, and that capital side is much bigger than the trade. So we can have the BRICS getting together and having settlement of transactions in gold or BRIC currency, but at the end of the day, the US dollar is just far too big.
Yeah.
The capital side. So what's going to happen? We can look at what's happening in the gold share indices around the world, whether we're looking at our ASX gold index. We've got a really important technical resistance of 7,700, which we've sort of come up against it, and we're fluctuating about that. But we're going through the right-hand shoulder of head and shoulders trend reversal pattern, and once we break through 7,700 with a bit of gusto. Now, keep in mind, we just went through 8,000 last week, and we pulled back under 7,700. But next time we go up, and when we know that the stocks are moving, there's going to be a very sharp move. And I'm looking to see about a 50% increase in the ASX gold index in the next leg, and that leg will achieve probably by the end of the year. It's a big move. Okay. But if we look at the volatility that we've seen in the ASX gold index in the past, we're not asking very much of it. Now, we can see the same sort of things in the North American indices. We've got the Huey, the unhedged index. We've got the XAU, which is the Philadelphia Gold Index, and we've got the GDX, which is the ETF of gold stocks. Now, they've got different characteristics that allow you to watch and play with them, but basically we're looking at some consolidation in a similar manner to what we've got in Australia, but that index wants to move up quite sharply once we break through. I follow the XAU for a particular reason. It's got the longest history of daily trading indices, but we're looking at quite a big move there. But it's also fascinating when we talk about the GDX and the GDXJ, the sort of mid-cap companies. The GDXJ has underperformed the big caps for a long time, and that's started to turn. So, and then it's also worth looking at the TSXV, the CDNX venture.
I don't want to go too far into the TSXV because we don't have a lot of time, Barry. So
anyway, those things that have bottomed and they're turned. So we're seeing a move into the small caps, an average index of 12 gold developers we look at bottomed after really underperforming the big stocks. And so it shows that the market breadth's improving and we're on our way up.
Okay. I'm going to come back to you in a minute, Barry, because I want to talk to you because there's been a disconnect between the gold price and gold equities. And I know, Bernadette, you were very involved in a company that is in the Lachlan Fold Belt of New South Wales, Legacy Minerals. Look, by the way, ladies and gentlemen, not financial advice whatsoever. Don't put a dime of your own into this market until you've asked your either financial advisor, got your own, done your own research. But I want to bring this one up because I know Bernadette's had quite a bit of dealings with them. But there has been a disconnect, hasn't there, Bernadette, between the gold stocks and, Legacy was one that you're very involved with. Newmont have come in with a joint venture, Newmont being one of the big guys out there that are liking what Legacy are doing. Do you see that disconnect? Do you think the market's going to come back in and realize that there is value for a company such as Legacy and any other companies perhaps that you might want to mention? Oh, no, you're on mute for some reason. Don't know why. Gotta love Zoom.
There we go. Sorry about that.
She's back.
No, I agree with you. There is a big disconnect between the price of gold and in particular junior exploration companies. Though I'm of the view that the explorers will catch up, those with quality projects, quality exploration projects, and good management teams, just solid operations. I think it will, now that the interest in gold is getting out of hand, which is a great thing. Hopefully that will be reflected in the share prices. Yeah, it's been a long time coming. Gold price, I think this should have happened 3 years ago, being where it is today. So probably the same thing will happen to the explorers. It's been a long time coming.
It has been a long time coming. And Barry, you've been a real bull, especially when it comes to, I think it was Northern Star. You love Northern Star.
Yes, I was just looking at my client's entry price. Typically they were in about 83 cents. And but I just noted yesterday that one guy's got a big holding that he was in there at 63 cents. They all took the SPP at $9, which sort of tended to skew the book value. But look, Northern Star, in my view, is the world's best gold company at the moment.
The world's best. That's big.
Yeah, yeah, look, it's got brilliant assets. It's just done it in very well, and I think it's continued to outperform the gold index, and it will do that for at least another couple of years. It might do something else. I know they feel they've got enough assets and for them to manage, so that they're not in the business of just going out and buying assets. So they're a matter of really working what they've got. So it's a really, really interesting company. They've got absolutely superb first-class assets. So quite like that. But coming back to this whole idea of the gold stocks versus the gold price. Now, the Australian Gold Index, S&P's gold index for ASX stocks, that's been declining against the Australian dollar gold price for 16 years. This is really, really important for people to understand. When we talk about the TSX, it's been in a bear market for 16 years. So it's horrible for them. But as far as our gold index is concerned, it's moving higher. It's in a bull market. But the gold index is still locked underneath that 16-year downtrend. So when this breaks, and it's not very far away, and that's why I say once we break through 7,700 with real robust activity, we're going to see this thing move, and it'll be that total sea change, total mindset change. Now, at the moment in Australia, we've got, would you believe, $1,132 billion of savings banks deposits.
How much?
1,132 billion. Now that's up by 300 billion since the beginning of 22. There was a rundown of cash with COVID, but once that steadied out, there's just been a build up. But now the rate of change of that build up has turned over, so it's not building up as much. So that's a huge amount of capital, $300 billion to come back into the market, in my view. So that's going to be pretty exciting. And yeah, there's this total change in the mindset of the investing public.
Yeah, and we're running out of time, guys. It's only a quick half an hour program, so I'm going to ask you for any last comments that you want to make. Bernie, let's go to you first. Bullish on gold, feeling like this is you said just before you thought it should have happened 3 years ago, but it's here now. You're pretty bullish on it going forward.
I think so. I think I don't think we should be surprised if gold does hit that $3,000 mark within 6 months. I mean, you just need to take a glimpse outside the window, and unfortunately, gold does well when the world's being challenged, and there are quite a few challenges out there at the moment.
We won't go into the Elon Musk challenge right now because we're not on Twitter, so it's all good. Now, but by the way, ladies and gentlemen, if you don't understand anything about gold, if you say to yourself, I don't even know where to get started, on Monday, the 26th of August at Crown Towers in Sydney, for free, you can come and have a listen to a panel of experts that are going to talk to you not just about gold equities, gold in Saudi Arabia, gold on the TSX. We're going to talk about equities, physical gold, ETFs, all the different ways. And it's going to be 2 hours, 1 hour presentation, and then questions from the floor. Because one of the things I'm sure you both would agree with me, so many people out there are used to having, currency in their wallet, digits on a screen. It's all fiat currency, and they have no idea about how to protect their wealth. And by that, what you were saying, all the currencies that you were talking about, Barry, the potential, the obvious thing is all fiat currencies are being devalued at the moment, and gold, you can't print gold. Barry, the final word goes to you.
Well, I like to think that the central banks will achieve the same level of gold as they had in August 1971 when the gold window in the US was stopped and the gold price floated. Now, we achieved that by the central banks buying another couple of thousand tons of gold. Do keep in mind that China is probably cheating in terms of how much it's got relative to what it tells people. But $7,000 would bring the gold backing of central bank reserves, whatever that means, back to around about 40%, which is what they had in 1971. And keep in mind that the US dollar will probably make up about 50% of the rest. And when you look at the other currencies, it's US dollar and it's daylight. And with the euro probably not going to be around in a few years' time, it's still going to be US dollars.
Interesting.
So we'll get to $7,000, I think, within 4 years.
That's the US dollar gold price, $7,000 within 4 years. This is recorded. We'll bring this out in 4 years' time and see how right he is. I really want to thank both. Go on, Barry.
The A dollar will be very strong because it follows the gold price and the gold, and more importantly, the North American gold indices. A very strong correlation.
All right.
Good.
We'll have to leave it at that, I'm afraid, ladies and gentlemen. But for now, listen, if you want to find out more, if you want to understand the gold market, if you understand and hang out with some really cool investors, and we're going to have some fascinating discussions, go to goldevents.com.au and make sure you register either for the educational evening on the Monday, or following that, there will be 2 days of lots of discussion, lots of mining companies there. You can talk to all of them face to face. But for now, if you like this video, please like, subscribe, share with others. We'll see you back next week. Thanks so much for joining.
Barry.
Thank you, Kerry. Thanks, Barry.
Bye.